Good afternoon, everyone, and bonjour. I'm Gary Douglas, President of the North Country Chamber of Commerce. I'm happy to have all of you participating here and the opportunity to send greetings, particularly to all of our Quebec friends who are watching here today from Plattsburgh, Montreal's U.S. suburb. There is no more successful, deeper, or broader economic partnership in the entire world than that between the U.S. and Canada. We went through a tough period of negotiations for a successor to NAFTA. There were ups and downs and some travails, but we came out the other end with a very positive conclusion that includes reaffirmation of 90% of what was good and working in NAFTA, which was very important to all of us, but also with some enhances and some changes. We're particularly pleased with how both governments at the end came together to ratify and then put forward all of the implementation steps challenges of this pandemic. It might have been understandable if things might have slipped off or might have been postponed, but even in the early days of the pandemic, the Canadian Parliament found it important enough to come together and provide its approval so this agreement could continue full steam ahead. And that's a great binational endorsement of just how important the relationship is and how anxious we all are to get on to carrying out all of the content of USMCA, or USMA, as our Canadian friends would call it from their perspective, the successor, NAFTA point two, whatever we want to call it. It's a good thing and it's time to carry it out. We're delighted today as the North Country Chamber to join with our longtime partners, Chamber of Commerce of Metropolitan Montreal. We've had an active working partnership and collaboration with them for more than 20 years, engaging in programs specifically to assist Quebec companies and businesses on how to succeed in the U.S. market. And today is just another important component of that. We're delighted to do this program together. I'm pleased at this time to turn things over to my colleague, Aranda Cortez, Director, International Market Development and Entrepreneurship at the Chamber of Commerce of Metropolitan Montreal. Aranda?
Thank you very much, Gary. Thank you for the introduction. Mr. Consul General, dear participants, Monsieur le Consul Général, chers participants et chères participantes, j'ai le grand plaisir de me joindre à vous aujourd'hui. It's a real pleasure to have the opportunity to say a few words before we begin this event. As Director of International Markets and Entrepreneurship Development for the Chamber of Commerce of Metropolitan Montreal, I am fully dedicated, obviously with my team, to creating the conditions for local businesses to grow and access new international opportunities. First, I would like to thank our partners, Canada Economic Development for Quebec regions, for their support, and most importantly, of course, the North Country Chamber of Commerce of Plattsburgh, with whom we have the privilege to collaborate in the context of this event. In fact, I am particularly proud to say that it has been more than 20 years that our organizations successfully collaborate to promote business ties between Quebec and the state of New York. We have jointly organized more than 80 trade missions over these years, bringing companies to discover, to learn more about customs compliance and how to transport their products to the U.S. market. Both of our organizations share the same goal, connecting businesses from both sides of the border. We have been focusing on doing just that over the years, and I believe that we have done so quite successfully. New York, and I'm going to say, just in case it has moved, because those numbers can have a tendency to move from time to time, so I apologize in advance if I don't have exactly the accurate information, but New York State ranks second amongst Quebec trading partners among the American states, behind Texas and ahead of Ohio. The state of New York is also positioned as first customer and second supplier of Quebec, still amongst the American states. So our joint efforts contributed to tangible outcomes for you business owners. I am glad that we are building on this fruitful relationship and innovating to pursue the organization of joint activities in online format that we are now so used to since the month of March. As Gary pointed out, the upcoming entry into force of the Canada-United States Agreement, CUSMA, an important phase in our country's trade relationship. Most importantly, it is an important phase for businesses. We gathered a broad range of experts for today's event. I trust that they will provide the tools that you need to understand the implications of the key changes for your businesses and ultimately navigate this new agreement with greater confidence. If this event helps at least one of you to leverage CUSMA to generate growth in your businesses, we will call it a success. Before concluding, allow me to thank Jason DeLille, National Director at Bolloré Logistics, and Nigel Neal, Senior Trade Commissioner at the Consulate General of Canada in New York, who have accepted to join us as well. Thank you very much. Merci beaucoup. Bon événement à tous. And the mic is back to you, Gary.
Thank you. It is a special pleasure for me to introduce our first speaker, our first special guest in today's program. We've had the pleasure over the last 30 years of working with many fine consuls general at the U.S. Consulate General of Montreal. They've all been fine and active and valuable partners. But our current Consul General of Montreal has become an especially great collaborator and friend. He has served with distinction on behalf of the U.S. in building and broadening the U.S.-Canadian relationship during an arguably challenging period because so much came on the plate during his time there, including the negotiations around USMCA. He's done an outstanding job. He's going to be leaving us in the near future. So this may be my opportunity before he leaves and goes to warmer climes to say thank you for the wonderful relationship we've had and all that you have done for the Quebec-New York relationship in particular. My pleasure to introduce Robert Thomas, U.S. Consul General of Montreal. Robbie?
Gary, thank you very much. Are you able to hear me okay?
Yes.
Okay, I always like to check, otherwise I start talking and then find out I've got to retrace my steps. The wonders of technology, right? So thank you, Gary, I really appreciate that. And I appreciate you and Arandi and both the fantastic chambers inviting us all to participate. I appreciate the work that you do to keep this relationship strong and vital, and the work that all your members do to keep our economies thriving. So thank you. It's been an honor to work with you all. So I think events like this are really important in terms of as we approach entry into force of the U.S.-Mexico-Canada agreement. I know in the U.S. we call it USMCA, and in Canada you call it CUSMA, and in Mexico they call it TMEC. And we can call it any and all of those things. But today I'm going to stick with USMCA. Because regardless of what you call it, it is not NAFTA 2.0. The USMCA really does modernize the foundational document that supports the trade relationship between us that has become second nature to all three countries. In fact, for 46 of the 50 US states, the top two export markets include Canada or Mexico. I know that's not a surprise, but last year, we had 1.3 trillion US of goods that flowed among all three countries. I also recently saw some stats that it's something on the order of 1.4 or 1.5 million Canadians work for US companies. So our countries are really dramatically intertwined. So our challenge with USMCA, and as Gary mentioned, the USMCA renegotiation landed right around the time I did in Montreal. Those things were coincidental, I might add. But hosting the round here in Montreal and working through all the challenges that came with that, our biggest challenge was to create an agreement that was going to not just look out for the core interests of each of our countries, but would allow us to modernize and move ahead for the benefit of North America as a whole, with even more trade and investment and greater integration of our supply chains and our markets. There are some key positive changes that USMCA brings. And first, many of you remember NAFTA was created in '94 before we used computers and the internet regularly. There was no section that covered digital trade. And USMCA now has set forth a first of its kind digital trade chapter that's going to set finally some predictable rules of the road for the digital economy. USMCA also adds stronger intellectual property protections, measures that incentivize investment and high-paying jobs in North America and the North American auto sector, and enforceable labor and environmental obligations. I think these are all things that substantially stepped us up from its predecessor. Today, I know that there's going to be some discussion of some of the new provisions that are going to reduce cost and bring greater ease and predictability to cross-border transactions. The SME chapter is particularly relevant because it's the small and medium enterprises that are the companies that my team here in Montreal and the commercial team works with the most. This is the first ever SME chapter. It creates a committee on SMEs comprised of government officials from each country and launches an SME dialogue to ensure that our SMEs continue to benefit from the agreement. As we're all painfully aware in the midst of the COVID-19 crisis, I don't need to run through the massive toll that it's taken on our economies. The pandemic continues to weigh down our economic prospects and threaten livelihoods in all three countries. We're living and adapting to these challenges as families, as businesses, and as institutions. But there is a bright spot, and despite these challenging conditions, the cooperation between our three countries has not faltered. Goods and services continue to move unabated between our economies while we enact temporary restrictions to protect health and human safety. I always like to say that the US-Canada relationship, and Gary's heard me say this, and Arandi too, more than I think anybody else and the whole time I've been in Montreal. But I always like to point out that the US-Canada relationship isn't Ottawa and Washington. Administrations in both countries come and go. The relationship is you and me. It's local companies on both sides of the border that are doing business together. And that relationship is strong. It's as strong now as it's ever been. And we need each other. The USMCA is going to help make that trade easier. To me, USMCA recommits us all to expanding and strengthening that trade relationship that binds us together. And as a result of this agreement, we're going to have stronger growth, more exports, more jobs, and rising wages. We will have fair trade and a more level playing field for all of North America's workers. As you get ready to navigate this new agreement, I do want to take a moment to tell you briefly how to use my team as a resource. My commercial team is part of a network of the US Department of Commerce. They have 107 offices all across the US and 4 different offices in Canada. Their job is to help you get the information that you need to understand how to make USMCA work for you. If they don't know the answer, and sometimes they don't because it is a complex agreement, they do know how to find the people who do know the answers. Like the speakers that we have here today, like partners in the chambers and resources across both Canada and the US. If you're in New York, reach out to Michael Grossman, who I believe is on the call today. If you're in Quebec, reach out to Kathy Feig, who is our commercial officer here in Montreal. She's on the call today as well. So I hope you won't hesitate to use the resources that are available to you, whether it's through the chambers and events like this, or through our teams on both sides of the border. I want to thank you again today, and I trust that you'll find the webinar useful. The partnership that's been going between the Board of Trade and the North Country Chamber is really phenomenal. It's a great example of what that cross-border collaboration needs to look like, and you all are helping to lead our economy in, onward and upward, I think, as Gary would say. So it's been a real pleasure, and thank you very much for inviting me to join you today. And thanks for the opportunity to work with you over these last 3 years.
Thank you again, Robbie, and all good wishes for the future.
Thanks. Good luck.
Rondi, for our next speaker.
Yes, sorry for a little delay. I was just waiting for my sound to be activated. I just want to say, because I know Monsieur Consul, or should I say Rob, after all these years, thank you very much for all your support and your work over all these years. Thank you very much. So now it's my turn to introduce our second speaker of today. So Nigel Neal, who is Senior Trade Commissioner, Consulate General of Canada, New York, who will talk to us about different initiatives and services provided by the Trade Commissioner Service. So Nigel, the mic is for you.
Merci beaucoup, Erandi. Bonjour tout le monde. C'est un grand plaisir d'être ici parmi vous. It's a great pleasure and an honor to have this opportunity to speak to you on one of my favorite and frankly most important topics right now, which is USMCA or CUSMA. I want to offer a special thank you to the North Country Chamber and specifically to you, Gary. You're a wonderful partner, a friend, and a champion of our bilateral interests, and we couldn't be doing this without you. Also, certainly to our friends from the Montreal Chamber, also great partners in this journey. I am happy to see that colleagues from the Délégation du Québec here in New York City, as well as colleagues from the Mexican Embassy and certainly Canadian business clients have joined this webinar. So we're all working to deepen our hemispheric trade. I can't reinforce enough the tremendous importance of the bilateral relationship, and nowhere is this more obvious than in the dynamic Montreal, North Country, Plattsburgh corridor. As an example of our great and ongoing collaboration, we have our flagship International Trade Day event, which is delivered in conjunction with the U.S. Customs and Border Protection. So we're planning our third annual event for hopefully November, December this year in Plattsburgh. This is a must for any company on either side of the border that is interested in deepening trade and growing supply chains. So stay tuned for that. So I am part of Canada's Trade Commissioner Service. So similar to what Consul General Thomas was explaining, my team and I provide market insights, we unlock business opportunities, we identify qualified business contacts, and help resolve business problems for Canadian business clients. We have a network of 13 offices across the US, our #1 trading partner, and 160 around the world. At this stage, I would want to flag my colleague Linda Soltis, who was on this call. She is our Buffalo-based trade commissioner and truly our expert and resource when it comes to cross-border issues and cross-border trade. So please keep her and keep us in mind. On April 2nd, Canada notified the US and Mexico of its readiness to bring USMCA into effect. July 1st is literally around the corner. So this aggressive schedule in the midst of the pandemic shows the importance and the fact and the speed that this happened so quickly are truly remarkable. Taking a step back, NAFTA had the ambitious goal of creating a North American trading bloc and more integrated economy and supply chains. The intent was to position North America as a strong competitor on the global trading stage, and in so doing, to benefit all three countries. This has absolutely happened. So where we are today, 26 years later, USMCA builds on and modernizes NAFTA. As Consul General Thomas was saying, we have a lot of modern provisions that bring the agreement into the 21st century, looking at e-commerce, SMEs, reducing red tape. I think that's one of the most important things for everyone on this call here. So what do you as international traders need to know? 80% of the products that were covered in NAFTA remain unchanged. So that leaves 20% for which there has been some form of change. So what companies need to do is due diligence. So ensure that you've classified your product correctly. We have a tool that's available. It's tarifffinder.ca. That's Tariff Finder with 2 F's, not 3, where you can classify your product. All you need is either the HS code or a full description, and it can tell you what tariff changes exist. Determine, excuse me, where in the agreement your goods are mentioned. Understand the changes to proving and certifying the origin of your goods. Make sure that you have documentation in order. So for example, the NAFTA certification form is no longer valid, but the new reporting requirements are in fact more flexible. And most importantly, use experts. And we've got 2 of them teed up on this call. So Jared Nutt of A.N. Derringer, I want to mention, I had the pleasure of meeting at our first International Trade Day 2 years ago in Plattsburgh, and hope to see you again. And Jason DeLille of Ballor, and actually our consulate and our headquarters, in fact, uses Ballor for diplomatic shipments around the world, and we received a large shipment of wine for an event that we have had to postpone as a result of COVID, but hopefully it'll be back on the books soon. So throughout the negotiations, I want to reinforce we stayed focused on what matters to Canadians. So that's jobs, economic growth, security, and opportunity. So in closing, I'll say that USMCA really does preserve the stability, the certainty, and the predictability of hemispheric trade. And this agreement really is the gold standard in terms of free trade agreements. So we're all here to help you on your export journey to the North Country region. Let's work together. I will turn it back, I believe, to Gary. So thank you, merci, and gracias.
Thank you, Nigel. And we look forward to doing the International Trade Day again in the fall. All of you stay tuned. We'll certainly broadly distribute information on that in the coming months when we're able to actually confirm the date in the program. But look forward to having perhaps all of you who are on this program today come down to Plattsburgh. The border will hopefully be reopened by then. And have you join in that program in the fall. So thank you for that plug and the opportunity to have people anticipating that. My pleasure at this time to introduce our next speaker, Jared Nutt, Assistant Branch Manager at A.N. Deringer, one of the leading customs brokers on the U.S.-Canadian border, headquartered in St. Albans, and a very large presence at the Champlain border crossing, which is Quebec's main gateway into the U.S. market. Jared has been a great contributor to many of our programs with the Chamber of Commerce in Metropolitan Montreal and the FCCQ through the years, and we're happy to have him with us today to get into a little more of the details about what you need to know about USMCA and what you need to know about complying. Jared?
Thank you, Gary, and thank you to the North Country Chamber and also the Montreal Chamber. It's my pleasure to be here today to talk for a little while about USMCA and some of the changes from NAFTA. A little bit about what we're going to get into today. Sorry, I just lost my presentation. Let me get it back here. The timing, which as we know now is July 1st. So it's right around the corner, less than 2 weeks away. Some of the key changes as they affect your business, first and foremost, rules of origin. We're going to touch on that, and also briefly textiles and apparel and autos. The largest changes as far as products coming into the US and Canada have to do with those two commodity groups. And also what you really need to do with your compliance, your customs compliance program to make sure you're ready for USMCA. The USMCA duration, it will terminate in 16 years from the day of implementation, which is July 1st, as we said. This is pretty unusual. Usually there's no end date. With NAFTA, there was no end date. But as a kind of a compromise, it was agreed after year 6, the review begins and discussions about extending USMCA beyond 16 years. So importers and exporters have somewhat of a degree of certainty in their supply chain and how they source. All right, key changes in the agreement. What's different? Some of the rules of origin, a lot remain the same. As I believe Robert mentioned, 80% is still the same, or Nigel. Certain rules have changed, so don't assume that the rules of origin haven't changed from NAFTA. You really have to go check and make sure, unless you import certain types of commodities that you know for sure will qualify for USMCA. New provisions have been added. Separation of agriculture and SPS, which is the sanitary and phytosanitary chapters. New sections, textiles and apparel. Digital trade was also mentioned, SME, labor and environment, and others. Other changes in the administration of USMCA, the importers will be responsible for USMCA claims. A certification of origin is required. This is not a prescribed or defined form, as in NAFTA. For NAFTA, it was the customs form 434 here in the US. Now it is a certification with no prescribed form. NAFTA marking rules are no longer in place. And what this was a different set of tariff shifts that were separate than the normal tariff shifts for NAFTA marking rules. Those are going away, it seems. changes in access for agricultural products for the US. I'm not going to get into that too much. Autos we'll go into a little bit later. The RVC, which you're going to hear me say a lot of times throughout this presentation, or that stands for regional value content, if you're not familiar with that term. As of right now, MPF, which is the manufacturing processing fee, will not be refunded for post-entry claims. This is a change from NAFTA, and it may be remedied later on. I believe there's a bill in Congress right now to address this, but as of right now, if you do not make a USMCA claim and you come back in a post-entry environment and want to get a refund for those duties, if they approve the claim, you will get a refund for the duties, but you will not get a refund for the manufacturing processing fee, which is 0.3464% with a minimum 26, maximum around $500. So while that doesn't seem like a lot of money in the long run, if you have hundreds or thousands of exports into the US, it does add up. So we'll see how that shakes out in Congress if that is reversed. Some other changes, de minimis. Under NAFTA, it was 7% of the FOB transaction value. And what that basically is you are allowed 7% or less non-originating goods that did not undergo a tariff shift to be allowed in the production of that good, of that NAFTA good. Under USMCA, this changes to 10%. So it is a little bit more liberal. Your goods may not have qualified under NAFTA, and now they may qualify under USMCA due to the increased de minimis. The de minimis will be different for textiles and apparel. Another change that we're seeing, and kind of a lesson learned from NAFTA, because it was instituted in 1994, the world was a different place. This was overlooked with sets. There was never a specific provision put in for sets. So you could have, as long as the essential character of that set was originating in a NAFTA country, the other components in that set did not need to be originating. So manufacturers took full advantage of this. One example is a bed in a bag, where you have a comforter and sheets and pillowcases and all sorts of things. So the comforter was the essential character of that set, and the sheets could have been from Malaysia, the pillowcases from Vietnam. It didn't matter. As long as that comforter was the essential character and originating in an NAFTA country, it qualified. So that loophole has been closed with USMCA. Now the foreign content in that set is limited to 10% or less. So lesson learned. Another change is low value shipments, where duty will not have to be paid. United States is one of the highest in the world. Our low value shipments are $800. That's not new with USMCA. That has been in effect with TEFTA for a while now. Canada and Mexico always raised their low value shipments. I think Jason's going to go into this later, so I'm not going to go too much into the Canada and Mexico raising their low value, but that was part of the agreement. As Consul General Thomas mentioned, there's new labor provisions. I'll touch on this briefly. It's not really something I get into as a customs broker, but one of the main changes is there's a presumption that a labor violation affects trade and investment, and it will be up to the violator to prove that it did not affect trade and investment, and not the other way around. So this is a good change for labor. Some other key changes are that there will be an independent investigation. If there is a labor violation, it's not going to be investigated by the Mexican government, for example. There could be independent investigators from the US or Canada to go down and investigate that. And then I'll move on to labor, which is another key change. And again, the presumption is that a environmental violation affects trade and investment, and the violator will have to prove otherwise. So this is something new for USMCA, and it's good all around for our 3 countries. All right, I'm not going to go through this whole slide, but I just want to mention IPR because it's not new for the US. We've been concentrating on IPR for a while now. Whenever a new administration comes in, they have what we call PTIs, which are priority trade issues. And with our current administration, IPR was one of those. Some others include anti-dumping, countervailing duty, agriculture and quota, and trade agreements, which we are talking about now. So with IPR, you really want to, if you're an exporter from Canada, be aware if you're using any trademarks or copyright. If you have a license agreement with a copyright holder, you'll want to make sure that is specified. We have seen shipments get seized at the border because customs is looking out for IPR violations. And that can cost a company a lot of money, not only the seizure, but there could be buybacks on the end with the customer. So just be aware that customs is looking at this in the US. All right, some of the things that haven't changed from NAFTA to USMCA. A direct shipment is required from one of the NAFTA countries to, one of the USMCA countries, to another. There's no MPF on originating goods. Repairs, alterations are free. No penalties with prior disclosures. And if you're not familiar with prior disclosures, those are when you notice something that had been reported incorrectly and you go to customs and you basically come clean, as long as they haven't noticed yet. There will be no penalties if you make a formal prior disclosure with customs. No change in duty deferral or drawback restrictions. A certification of origin is still required. However, it is not a defined form. Post-entry claims. In the US, you have 1 year from the date of import. It could extend that time depending on the country, but in the US, it is only 1 year. There is still full accumulation of among parties for originating goods. And what accumulation is, it promotes regional supply chains and an investment where you have a non-originating good that comes from a company in the region sold to company 2 in the region. That non-originating good, that regional value content and that non-originating good can be used to make that second good by company 2 qualify for USMCA. So it can get very complicated. So if you are using accumulation, I know in the North Country here, there are many companies that do business in Montreal and with companies in the North Country. So you may be using full accumulation, but if you have any questions, it's best to consult a trade professional because it can get very in-depth. All right, rules of origin. Since NAFTA was instituted in 1994, we wanted to, where the 3 governments wanted to align USMCA rules with those of more recent trade agreements like TPP. So we see a lot of the language used in USMCA similar to that of TPP. Substantial transformation, just with any other country of origin determination. And these are going to look very familiar to anyone who is claiming NAFTA today and will claim USMCA after July 1st. These are, we used to call them preference criterion under NAFTA. Now they are origin criterion. And this is how you're claiming your goods qualify for that free trade agreement. So criterion A is wholly obtained or produced entirely in the territory of one or more of the parties. So this is reserved mostly for natural resources. Think crops harvested from the ground, cattle, anything grown, fish, anything harvested within the territory. We used to call this the 100% molecule rule. So 100% of the molecules in that product were grown in that country, in that NAFTA country. So this stays pretty much the same. I think something that was clarified is that if you had 2 articles that qualified under A, a manufacturing process between those articles, one or more articles, did not disqualify it from being an A claim, which was under some uncertainty, but now they defined it, and that manufacturing process does not disqualify it. Preference Criterion B is the one we see the most. It is the most widely used because you can have non-originating goods in the production of that commodity as long as they satisfy Annex 4B, the rules of origin, which are going to be very important when you check to see if your goods qualify for USMCA. So if you are making an A claim under NAFTA, you're going to be good under USMCA. There's really no question about that. If you are making a B claim under NAFTA, you really need to go into the rules of origin to make sure they haven't changed for your product. That's really vital and one of the steps that every exporter, importer, producer should make. Preference Criterion C, produced entirely in the territory of one or more of the parties, exclusively from originating materials. So this is when all of the inputs into the product you are making are originating. They can be originating under an A claim, a B claim, C criterion. It doesn't matter as long as all those inputs are originating. D is more of a fallback claim if your goods fail to satisfy a tariff shift. They can also, but they do satisfy RVC. They can fall into this provision. This is when you have components going into your product that are in the same tariff heading of your final product, so they don't undergo that shift in your tariff classification. But all of the content put into it does put them above that 60% for transaction value or 50% for net cost regional value content. So let's talk a little bit about RVC. This has not changed from NAFTA to USMCA. The one thing that has changed is, which is a good thing, you can use the value of the processing or non-originating materials in that RVC calculation. So this is a good change from NAFTA's, making it a little bit more liberal, and so more companies can claim USMCA. It was also part of the TPP. Another change is recovered materials. Basically, if you have, say, an alternator from China that went into a vehicle, if you scrap a car, get the alternator out, ship it to the US, that alternator is disassembled, clean, and you're using components from that disassembled alternator into a remanufactured alternator, that alternator is now US origin if it was shipped to the US and disassembled there. So it makes it easier to make recovered material originating for USMCA. So that's another good change. Textile rules of origin, I'm not going to go through a lot of these because they get pretty in depth. I just want to let you know, if you are exporting textile and apparel, you really need to look at it more closely to make sure that your goods still qualify. The de minimis, as I mentioned before, is different for textiles. Is 7% by weight of fiber under NAFTA, and there are new stipulations under USMCA. So you really need to look at your specific product and if it is impacted by de minimis, the new de minimis rule. Autos, again, some large changes. RVC is going to go up incrementally throughout the years. For different parts. So if you're exporting vehicles, you want to look at the duty rate, because they can vary depending on if you're exporting a car, a light truck, a heavy truck. So it may not be worth it for you to try to comply with the regional value content, where there is an LVC labor value content. You may decide, if you have a 2.5% duty rate, that's really not worth it. So you really need to look at your records and see if this is worthwhile for you, and be more careful when you're exporting vehicles and claiming USMCA. Core parts, RVC will increase 85%. Core parts are the engine, transmission. Principal parts, that's more of like alternators. Complementary parts, that would be windshield wipers and electronic stereos, things of that nature. Key implications for your customs compliance program. When customs goes to you for USMCA verification, we'll want to make sure that you have done your due diligence, and the best way to do that is have a compliance program. It needs to be documented with a compliance manual, supported by your senior leadership, and just down the line. I don't want to spend a whole lot of time, but you should have an import compliance program, especially if you export or import with any sort of volume. The casual one-time importer exporter, this is not feasible, but you will need to have this if you're continuing to export. Compliance manual, you should identify the roles and responsibilities, internal controls. SOPs are very important. That's one of the first things that customs will look for. They'll want to make sure that you are training your employees, your customs compliance employees, so they are aware of new changes like USMCA. So understand how what has changed with your products with USMCA. You need to conduct eligibility analysis and document that analysis. Some of the things that customs will look for, they just don't want to see a certification. That's only to make the claim. You need to go back to your records and show that you actually qualify. They're looking for flow charts, bill of materials of goods, export documents. They're looking for purchase orders. So you need to have a document trail and what documents you use to qualify your good under USMCA. Some of the things you need to look for: what are the USMCA rules for your product? Those rules of origin. For NAFTA, they were in General Note 12 of the tariff schedule. USMCA is in General Note 11. What are the thresholds? If the thresholds change, they will be under the rules of origin as far as both the tariff shifts and the RVC. Where does your product come from? Where do the components come from? What are they valued at? What's the percentage in your product? You need to be looking at these things if you have any doubts. Again, if you were claiming a B criterion under NAFTA, you need to look at these rules of origin. Does your product still qualify? Can you prove it? Again, the documentation trail. Compliance records, you need to maintain those records for 5 years from the date of import. And make sure you document that you've confirmed eligibility analysis. Maintain the certificates. You must have a certificate at the time of import. So July 1st comes around, you should have that certificate on file if you're making that USMCA claim. US Customs has hinted that there'll be relaxed enforcement in the first 6 months, so you may not get a CF-28 request for information this year, but you should have that certificate available at the time of import because they could come back next year and do an audit. There's no grace period with USMCA. There's no overlap of NAFTA and USMCA. It's a hard cutoff date. So NAFTA ends and USMCA begins on July 1st. You should think about adding a labor component to your current policies and procedures in your compliance manual. The U.S. has been focusing on forced labor for some time after TEFTA, which is the Trade Facilitation Trade Enforcement Act in 2015. So you should think about adding that to your policies and procedures. And you also need to keep NAFTA records. Remember, Customs can go back 5 years, so they can still audit those NAFTA claims that you've made, even though NAFTA is no more. So just be aware of that. Origin procedures, certificate is still required, no prescribed format. I think I'm running short on time, so I will move on. I just want to make sure I don't go over anything that is important. All right. The importer, exporter, or producer can complete the certification. And but remember that the importer is ultimately responsible for that claim. There are 10 data elements that need to be on your certification of origin, and there are different versions floating out there. Contact your provider for customs clearance. I'm sure they have one. If not, I believe CBP will be making one, but these are 9 of the 10 components that that need to be listed. They are virtually the same as the elements that are listed on an AFTA certificate, but you do not want to use an AFTA certificate when you're making a USMCA claim. CBP may use those data elements, but it shows that you are not aware of the changes if you're using an AFTA certificate, and I would not advise it in any case. In the blanket period, one thing you want to watch out for in the blanket period we see a lot is it can be up to 12 months. A lot of people will list January 1st to January 1st. That is a year and a day. So it technically invalidates your certification. So if you're doing an annual certification, January 1st to December 31st is recommended. The 10th element is the verbiage here. This is something, if you're making your own certification, you need to list this exact language on your certification. Everything else is not prescribed, but you need to have this next to your signature, which can be digital. And there are various programs you can use that are out there for a digital signature. It can also be a physical signature, but they are allowing digital signatures for the USMCA certification. So key takeaways today, July 1st is the date. Make sure your certification is available at the time of import. That is usually the day it crosses the border and released by customs. RVC levels have changed. Make sure you check your eligibility. De minimis levels have changed, have increased for most products from 7% to 10%. And it is down to the wire. You really, if you haven't done your due diligence, you need to get on it now. There's really no time to wait. I mean, if you haven't contacted your provider yet, I would do it tomorrow or today. You need to be ready. I can't stress that enough. You need to be ready. You need to be compliant because it could cost you a lot of money in the end. So that's all I had for today. I think you can type questions in the chat box, but if you have any questions for me afterwards, my email is listed right there. And again, I want to thank the Chamber, North Country Chamber and Montreal Chamber for having me today.
Thank you very much, Gerald. It was very, very important information, and I agree with you. And Deringer has been a great partner all over the years as well, so thank you for that. And as you said, the time to know and to get information about changes is now. And very soon it's going to be, it is yesterday, so it's very important to do it. And continuing with the custom experts, because if you hadn't got it so far, I mean, you know what they say about custom brokers. They are not exactly accountants, but they calculate taxes. They are not necessarily policemen, but they know about the infringements and rules. They are not necessarily lawyers, but they know about laws. And finally, they are not diplomats, but they know about international agreements. So it's quite a profession, right? So continuing with that, thank you, Jared, again. And now it's my turn to introduce Jason Delille, Customs National Director at Bolloré Logistics, who will talk to us about the basics of the importing and about custom compliance as well. Merci, merci beaucoup, Jason, pour, c'est à toi la parole.
Well, thank you very much. My pleasure. Can you see my screen okay?
Yes, we can.
Yeah, okay, perfect. So, and thank you, Jared. It was extremely interesting, and I have to strongly recommend that for those people importing into the States, really the importance of partnering with someone that's knowledgeable about U.S. customs and customs regulations is extremely important. So we'll jump into it. 2020 being somewhat of a difficult year, to say the least. Let's just see if we can't get some of your imports moving a bit smoother if possible. Most of my presentation is going to be geared toward importing into Canada. However, lots of this is reciprocated within the U.S. also. We will talk about different importers, whether you're resident or non-resident, coming into the States or coming into Canada. One of the first things we will do really to get this started and to cover the basics is who is the importer of record? And it sounds like a silly question, but it's amazing how many shipments get stopped or get delayed simply because of this. So much like you or me going to another country, usually one of the first questions a customs officer will ask is, where are you going? This applies to commercial shipments and commercial goods also. Customs, be it U.S. or Canadian, need to know who the importer of record is. The importer of record is the one that will be responsible for duties, for taxes. They're the ones that will designate a customs broker if a customs broker is being used. And likely, or also, if a shipment is going to a different address, so in the case of a drop shipment, this too is equally important to be declared. On the Canadian side, we do have to declare through our system who the importer is and also who the consignee is. Shipments going into the States require even more information because a tax ID or an IRS number is required not only for the importer but also for the consignee if that's different. Now, also bonds could be required. So if you're shipping to the U.S. or if you're importing into the U.S., a single trip bond or a yearly bond is required. This is not required when importing into Canada. It is something, though, that is going to eventually be required. Under the new CARM program, which Canada Customs is introducing, bonds will be required by importers into Canada. Importers into Canada will eventually manage their own account. They'll go on their own portal with Canada Customs and pay their duties and taxes equally so. Now, it may sound silly, but do both parties understand their respective relationship? So if we break it down to the most simple of transactions, generally you have a company that's selling and you have a company that's buying. However, how many of us have ordered something online only to find it stuck in customs, it's not moving, or all of a sudden we've got an invoice with extra clearance fees and duties and taxes? So, I mean, most of this is easily managed under the use of Incoterms. So, and Incoterms can be a little bit intimidating. They don't have to be. Generally, you're dealing with either a DDP basis or a DAP basis for simple shipments. So it's just important to know who is responsible for what. Because once again, the duties, the taxes, and legal responsibility can very easily be defined. So you need to know what each person is doing in the transaction. Now, for a Canadian company, there's a good chance that you're already registered. You more than likely have a GST number. However, if you plan to import, that GST number does have to get activated into what we call a business number. So this is easily done. If you're an officer of the company, you can call the division, which is based in Winnipeg, and they'll give you a business number. There's a simple form that you can fill out. It's a very easy process. However, if you are an American company sending stuff into Canada, and if you wish to sell on a DDP, meaning delivery duty paid basis, or you want to be considered a non-resident importer of record, you too will need at minimum a business number. So it's just important that you get that. whereas I think in the States you may have an IRS number, tax ID number, and various ones. In Canada, you have your GST number, which needs to be converted to a business number. And also another thing, just to keep things moving, is does that importer of record have a customs broker? Setting up business with a customs broker is not necessarily that difficult, but there is a power of attorney that is required. And although required both in Canada and in the U.S., I know it is much more strict in the U.S., but a power of attorney does have to be signed and issued to the customs broker in order for that customs broker to act on your behalf. Now, all of these things are pretty simple. We hope to reduce delays by getting this in line. Most shipments before they cross the border, either into the States or into Canada, are usually electronically cleared, and I would even say pre-cleared. So in Canada, we have the PARS, pre-arrival release system, and in the US, you have the PAPS system. Both are very similar. However, that being said, most shipments will either wait at a warehouse before crossing the border. So the carrier will often make sure that the shipment is accepted by customs before driving it through. A worst case scenario was if your shipment was in a truck and that truck had to wait at customs, you would definitely incur additional waiting time or storage time. Of course, there's GST and duty, which we'll look at in a few minutes in more detail. These are just some of the answers of what we spoke with, because I believe these decks of slides will be available for everyone on the presentation. I think important for non-resident importers, so I'll be talking mainly to U.S. companies that want to sell on a DDP basis. Once again, the importance of registering for a business number as it is required in Canada. And whether you're a non-resident or a resident importer, just important to know that if you do not have a business number, that alone can take up to 48 hours with the government. And of course, you have to include some time for a customs broker to get set up with power of attorney and perhaps databases, et cetera, et cetera. So you do not want to start this process when your shipment is being held at customs. The GST is a flow-through tax in Canada for most provinces at the rate of 5%. And I say most provinces because there's some that have a combined tax called a harmonized sales tax, which can range, but we'll focus just on the 5% for now. If you are a resident doing business in Canada, I'm sure you already have your GST or your HST number. Once again, if you plan to import, you do need to get that converted to a business number that allows you to import. The 5% is fairly easy for a Canadian company to get back. The 5% is not a tax that's simply added at the last level of processing or at the last level of sale. Once again, it's a flow-through tax. So for instance, if I was to purchase something for $100, I would pay $105 for it because I'm paying the $5 GST. But when I sell it, I may be selling it for $150. Therefore, I'm collecting 5% on $150. Now, all these GST taxes are generally claimed back through input tax credits, depending on the size or the volume of the company. These are filed either monthly, quarterly, or yearly. But once again, it's a flow-through method, so it is important to know. And yes, as a non-resident importer, so I'm talking to companies based outside of Canada that want to bring their goods in, they too have to pay this 5% tax. Once again, fairly easy for the Canadian company to get it back, and we'll look at a little bit as a non-resident after. Duty, I think we all know about it, and you know the whole idea between these free trade agreements is to reduce or eliminate duty. But duty is basically a percentage that is based on the origin of the goods, the classification, and hence the tariff treatment. Now, classification is something often we take for granted. We're not always sure who's responsible for it. An importer will say the broker should know. The broker will say, well, the importer, you're the ones that knows your goods. So it's very important to have that discussion with your customs broker. Don't just take it for granted that whatever he puts on the paperwork is correct, because at the end of the day, you are responsible for that. Lots of people or lots of customs brokers will offer an opinion. They often have a consulting department which can study your case or your product and offer you a classification. At the end of the day, I have a good friend who's a consultant, and he used to always joke about this. He said, at the end of the day, my opinion is worth what I'm charging you, which is nothing, because really customs will always be the deciding party in that. Now, there are ways to protect yourself, and I do not think it's required all the time, but you can ask for a ruling with customs, and you can do this through your customs broker or on your own. But that is one way to really, really protect yourself and know that you do have the right classification number. And it's important because classification can also drive other requirements. In Canada, we have what's called OGD, other government departments, or PGA, participating government associations, which are similar. But for instance, bringing in a plastic bottle is fairly easy. But if the plastic bottle has some sort of liquid into it, we're definitely going to have to submit additional information to these other government departments. So it's very important to know that we have the right classification. Oh. Once again, your broker is your friend. He is a trusted trader. And then I like very much what was said earlier about not being a diplomat, but having to know all the various things. So, clear documentation, such as a Canada Customs invoice or a commercial invoice that has all the information, is really going to help. Complete description, the classification number if possible. One thing often that we don't always see that can help also is something like the reason for import, because if your goods are coming in for repair or maybe after repair, or was it warranty repaired, all this will affect the way the declaration is done, and will also have an effect on your GST. Even things in Canada, we have to declare if the companies are related. So if a company from the US is shipping into Canada and it's an intercompany transfer, we do have to put a code which shows that kind of relationship. And once again, compliance, record, the broker will help you with compliance. Record keeping is mandatory for both the broker and also the importer of record. In Canada, it's 6 years. In Canada, we have what's called the AMPS program, which is the Administrative Monetary Penalty System. So although customs say it's designed to be helpful and not just to punish you, I mean, there is a financial aspect to it. And the more times you get fined, well, the higher the fine goes up. We'll just speak quickly about COVID-19. What I've seen, the Canadian government has allowed importers to defer the payments of their duty and GST for the past few months. However, that's coming to an end at the end of June. So far, we did not hear that there would be any extensions, so we believe it's going to probably finish at the end of this month. The government also introduced a couple order in councils and a few tariff items allowing for either duty-free or duty-free and tax-free goods to come in that were related to the COVID-19 pandemic. I'll talk a little bit quickly about OIC 20-304 because there is some misinterpretation. Now, generally, this order in council allows for the import of goods to be duty-free. It encompasses several HS numbers. with descriptions, but those descriptions are only for illustrative purposes, and hence the I would say the lack of clarity. So I think it's important that if you are importing into Canada, to look at this OIC to see if some of your goods applied. You can go back and reclaim your duties if they were paid in error. Now, once again, also, there are lots of HS numbers mentioned, and that would be up to you to discuss with your service provider if it's something you really want to go back and claim. Is it something that you believe you're eligible to claim? We have seen, some restrictions when it comes to the imports of personal protective equipment and the likes. When it was more of an emergency situation, we did not see lots of delays or inspections happening. I do recommend, though, it is important if you plan to start bringing these things in, I would say on either sides of the border, because there are generally permits that are required. Technically, even if you want to bring in a Band-Aid or Band-Aids or bandages, I guess is the real term, you do have to have a medical device establishment license. So it's not necessarily as simple as saying, I'm going to start bringing in gowns or I'm going to start bringing in masks and sell them to the masses, because you might have to do a little bit of your homework first. And what I've seen is that in general, customs have been fairly supportive. They have not been too intrusive. Interpretation of some of the requirements have been vague by many parties, just because they don't want to stop this stuff. But once again, it's important to do your homework first. Just quickly on CUSMA, so our Canadian version of the USMCA. One thing that's important, I think Jared might have said it, is that all current NAFTA certificates in Canada anyway become null and void after June 30. So your NAFTA certificates that you as an importer or your brokers hold have to be converted into a certification of origin. Quite simply done. However, we still need those new certifications of origin. Now, the big difference between an old NAFTA certificate and the new certification is that it can be completed by either the exporter, the producer, or even the importer of the goods. Now, in the past, this was not the case. However, it does have to be a knowledgeable person, and you do have to have the appropriate proof and the supporting documents. And I believe I even have a template attached to this presentation, but whoever is the certifier has to be indicated. If you've had any advanced rulings with customs under NAFTA, you may have to do new ones under the new CUSMA. One thing that's good is that you will now have up to 4 years in Canada to go back post-entry to file claims, whereas under NAFTA it was only 1 year. Textiles and automotive, as Jared said, are two of the products most touched. And in relation to CUSMA, the courier LVS used to be $2,500 Canadian, which meant that couriers such as DHL, UPS, FedEx could bring the shipments. If they were valued under $2,500 Canadian, they could bring the shipments, technically deliver them, and then the customs broker would do the filing afterwards. So that has increased to $3,300. It used to be $20 for duty and tax-free entry. Now it's $40. Up to between $40 and $150. It's duty-free, but the GST or taxes, if personal, will still apply. And above $150, well, duties and taxes will apply. This I won't go through because Jared talked about it, but these are your origin procedures and also what is needed on a statement of origin. Here's an example of Bollore's statement or CUSMA certificate that we're using. As mentioned, it's very similar to a NAFTA certificate, but it is not a NAFTA certificate. We are providing these to our clients who want to transcribe their NAFTA information on one of these or send them to their suppliers. Once again, also under NAFTA, we could go back post-entry only a year to make a claim. With the new CUSMA, we'll be able to go back 4 years. Now, the claiming process is similar, so we'll have to have appropriate proof, the appropriate certificates, the appropriate claims showing that the goods do originate and do qualify. One thing that has changed, though, is with Canada Customs, we are moving to, or we have moved to what's called an ARL system, which is an accounts receivable ledger. So less and less checks are being sent to clients or to brokers. If there is a debt owing on the importer's account with Canada Customs, a refund check would be applied, or a refund would be applied to that debt. Here are just some references, once again, in terms of applying for a business number, some origin procedures, rules of origin, CUSMA, and thank you. So I think that's it for me, and I hope I didn't go too much over or under my time. I do appreciate this, and I want to thank everyone for participating, and also thank you for inviting me.
On? Okay, I want to thank both of our presenters. Those are excellent presentations. A lot was covered, a lot of detail, as was mentioned. For those of you that are concerned, there's a lot of detail in a lot of those slides, and some of you may have some angst. Geez, I wish I could have looked at that slide a little longer. The full recording of today's program, along with the PowerPoint presentations, will be available online. If not later today, certainly by tomorrow. You'll find it at our website, northcountrychamber.com tomorrow. And I know the Montreal Chamber will be making it available to all of you as well. So you'll have an opportunity to go back, spend some time with those slides, see some of the references and contacts, be able to fully absorb it. At this point, we're going to open this up to questions that many of you have posed during the program. And I'm going to call upon Susan Matten, Vice President of Economic Development here at the North Country Chamber, and our colleague Dina Mansour, Advisor, International Market Development at the Montreal Chamber, who will pose your questions for you.
Thank you very much, Gary. Our first question is for Jared. And the question is, does my USMCA certificate need to be presented to US Customs at the border with the other shipment documents?
No, you do not have to have a USMCA certification or an NAFTA certificate currently. Really, you should only provide those documents if a request comes later on from Canadian Customs or US Customs. So we would actually not advise you to send your USMCA certification with your shipment.
Thank you. Dina, could you ask the next question?
Hi, yes, so our next question is for Jason. So Jason, if I am a small Canadian business and would like to bring my own shipments through the US border in my car, am I allowed to?
Jared will be better to answer this than me, but no. I had a client that was in audio, small client, but high-end audio, and he used to like to drive to the States with his speakers to do demos and do and to show it to stores. And years ago, it was fine until a few years ago. And Jared will be able to confirm this with me. My guy went to Champlain, New York. Of course, he was told to turn around or apply for an exception, I believe, which he didn't do. So he decided to go to Highgate Springs and try his luck over there. Needless to say, I got a call from him and he was panicking, and we managed to get him through before he went to jail. But no, I do not recommend people crossing the border, both U.S. or Canadian, in private cars with commercial goods, because the rules have changed. And Jared may want to add a little bit more to it, especially for the U.S., because it's more strict in the U.S. than Canada.
So Jared, you can go ahead.
I agree with Jason. I mean, there are instances, if it's an informal entry under $2,500, there's discretion by the officers. But if you are having commercial goods in your vehicle crossing the border, you should have an entry filed. And if you're having an entry filed, by a broker, you should have a ACE manifest if you're coming to the US, or an ACI manifest if you're going to Canada, because you are acting as a commercial carrier, even though you're in your personal vehicle.
When we go to shows, we actually use our commercial, we go through commercial, and they always have the truck thing is way up here and my car's way down here, but it works. Jared, one for you. Can NAFTA certificates of origin be used for USMCA certification?
You know, there's a lot of speculation on that. I'm not going to say definitively they can't, because I think that's going to shake out. I would not advise it one bit. The data elements are on your NAFTA, so strip those off your NAFTA if it still qualifies for USMCA, and complete a USMCA certification. If a verification, as I mentioned, from customs comes about and they see a NAFTA certificate, they're going to know that you're not educated on the changes, and they're going to dig deeper. So after July 1st, don't do it.
Don't do it. Just don't do it. Okay.
Thanks. So our next question could be for both of you. It's how will textile manufacturers be affected by the new agreement?
I'll let Jared take that. He seems to be more detailed in the textiles than I am. So,
you know what, this could be a day-long conversation.
Yeah.
Ultimately, it's going to come down to your specific textile product, and if the rules of origin change for that product. So if textiles and automotive are the two industries that were most impacted. So if you're in the textile industry, do you want to claim USMCA? You need to do some digging on your rules of origin. On your de minimis, as I mentioned, because it's different for textiles. There's so many different rules on textiles when it comes to yarn and fiber. You might qualify for TPL if it was a tariff preferential level if it's apparel. So you really need to talk to a trade professional if you don't have any on staff to make that determination, because your good is a textile that's impacted.
I think I read even on one of Jared's slides, like even there's exceptions now or rules for the sewing thread in certain cases. So it's.
Next question, and Jason, maybe this is one for you. How do changes from NAFTA to the USMCA favor equitable labor strategies and green commerce?
Hey, that's a tough one. I'm going to say a bit like Jared. As a customs broker, this is not my area of expertise. We look more on the trade improvements and benefits, and perhaps change, like you said, of regional content or the reduction of customs duties. In general, it is supposed to help, but I couldn't go into detail of that specific question, really.
Well, maybe that's something we can have a future webinar on.
Yeah.
So I have a general question. The question is, who is responsible to classify goods, and is the classification number required on the invoice?
Right. The importer of record is responsible for classifying the goods. That is, it can be a non-resident importer, Canadian company exporting to the US. They are the importer of record. I know it's confusing. They are responsible for the classification. Does the classification need to be listed on the invoice? It should be listed on the invoice. If you don't want holdups at the border, it doesn't really, your goods not going to be stopped because everything's pre-cleared if that 10-digit tariff classification isn't listed on the invoice, but I recommend that it is listed on the invoice.
And I agree with Jared 100%. In Canada, technically, we're supposed to have the classification on the invoice. We do not often or always see it, but it is important to note that a customs broker will be able to help an importer with classification if required, but at the end of the day, the importer is the one responsible for that classification number, so they do have a responsibility in the whole process.
So I think you answered the next question already. Then it says if the classification number is wrong, is the broker responsible, but actually the importer is responsible, yes?
Right. Yes. The importer of record is ultimately responsible. If a lot of times a broker will give an opinion, because it can be a very long, drawn out process to get a classification. If you really want to, you can apply for a binding ruling from customs. So then it's binding. You can use that classification. But with brokers, it's mainly an opinion. So yes, the importer of record is going to be responsible, even if the broker supplied the classification.
Thank you.
So another question for both of you. If I notice an error on my entry, but the shipment is already clear, do you have to correct it?
Yes. In Canada, I believe it's 90 days after reason to believe. So yes, if you notice something on your entry that's wrong, whether it's a valuation, classification, whatever, you do have a responsibility to correct it. And in most cases, self-disclosure does not attract any penalties. That's for the Canadian side. I'll let Jared talk about the U.S. side.
Right. I agree. I mean, it's pretty similar on the U.S. side. We actually, we have 10 business days, a little bit longer than Canada has, to file the final entry summary after a good crosses the border. So if we haven't filed the final entry summary and we usually file it on the 8th business day, we can change it without a post-importation claim. So there's a little bit of grace period. Then you don't have the extra charges. You don't have the increased scrutiny from customs. So yes, you should, if you notice something's wrong, you should want to make a change on that entry.
Good, thank you. This is for both of you. If I have a ruling decision in one country, can I assume it is okay for the other country?
No, don't.
No, that would be, right? Yeah.
And also, if you have a NAFTA binding ruling, I don't know if Jason might have mentioned this. If you have a NAFTA binding ruling, you can't assume that is going to be correct for USMCA.
Good point.
All right, next question is, do I need to purchase a bond when importing into the USA, when importing into Canada?
Right now for Canada, a bond is not required, but it will be. Under the new CARM program that Customs is coming out with, however, it has been delayed. Importers will be required to have a bond. Right now, the bulk of them use a customs broker's bond, but in the future, they will have to have their own. But right now, it is not a requirement for importing into Canada.
Great.
Right, and importing into the U.S., yes, you need a bond on file, liability bond for customs. Most importers who have more than a few shipments a year, that's a continuous bond. So you purchase a yearly bond from a surety company. If you only have 1 or 2 shipments a year and they're low value, we can get you a single entry bond, so you're not paying that yearly bond fee. It's more cost effective if you only have 1 or 2 shipments, depending on the value of those shipments, but you do need a bond.
So Dina, if you could take the next one since it was submitted in French.
Sure. So we have a question in French. So I'll say it in French and then in English. So in French, Jason, I think you will understand. Le fait pour un exportateur canadien de devoir rencontrer les règles d'origine à la fois de plusieurs traités de libre-échange est-il un facteur qui pousse l'exportateur à ne s'approvisionner qu'au Canada? And in English, so is the fact that a Canadian exporter has to meet the rules of origin of several free trade treaties a factor that pushes the exporter to buy only in Canada?
I don't think so. I'm not sure if I understand the question 100%, but in general, the whole idea of CUSMA or USMCA is really to increase trade and to help. So and also there's different aspects. Is he importing and selling? Is he manufacturing? So yes, if he's manufacturing, he may want to source his raw materials from Canada so that it does qualify and meet the free trade agreement to be able to sell into the States at a duty-free status. So I would say, yes, it is encouraging, but it would be the same thing for the States. The manufacturer would want to source as much locally to have that product qualify if he's selling to Canada. In the end, if someone is importing, for instance, from China and then, manufacturing over here, it's probably not going to be a successful business model anyway. So so I would say, yes, I think in the manufacturing process, it does stimulate local economy, but with the benefit of being able to sell to the U.S. or Mexico at a 0% rate. And Jared can vouch for me or say more if necessary.
I like your answer.
That question was from a Canadian exporter, so they're probably manufacturing in Canada and wondering if they should meet their suppliers also in Canada, or how should they follow the new rules of origins that are in the new treaty.
Yeah, well, as Jared had said, Jared went into lots of detail in his presentation, and when it comes to regional value content and all that, it is important to look. So, if I take something similar, like Jared said, a cow that's grown in Canada is Canadian, but if you were to take an aircraft engine, which has multiple countries of origin or parts from multiple countries, then a real full bill of material would be required and a real analysis. And I'm not a techie guy when it comes to origin specs. Like Jared is better than I am at that, but there's different formulas that have to be respected, and it is a complicated process, and it's not something that you can say, well, I put it together in my garage, therefore it's Canadian. That would not apply.
So I think we have time for one more question, and I'm going to summarize this a bit. So are there any particular changes for the food processing industry that you think should be highlighted? And are there any that you see that may be happening in the future for that industry?
Right. That's a pretty broad industry. And again, it's not, focused in textiles or automotive. So I think there's probably not as many changes, but you have to look at your specific product and go to the rules of origin in the US in General Note 11. Look under your tariff classification. Look if there's been any change. Has there been a change in the tariff shift requirement? If there has and you don't meet that, look to your regional value content to see if it's 60% for transaction value and 50 for net cost, which is the norm. You really need to look at the rules of origin for your specific product. That's the food processing industry. That's a huge range. So,
yeah, sure, many sectors for that. I'll turn it back over to Gary.
Yeah, thank you. It was a great program. I learned a lot, and I've been involved in this for 25 years. Of course, it's a new agreement, so there were new things. So I hope you all found it valuable. Our thanks to all of our presenters and also to all of our participants who tuned in and hopefully are going away with some value. I'm sure you all are. A reminder that this program and the PowerPoint presentations will be available online by tomorrow, so you can follow up and re-listen. Maybe you didn't quite get that answer and you want to hear it again, or spend some more time looking at the slides. We're happy to make that available to you. Special thanks to our partners and friends at the Montreal Chamber for once again collaborating with us in this program. We look forward to doing many more programs with them in the months and years ahead. My pleasure to turn things back to Arandi for a wrap-up.
Thank you, Gary. Likewise, on our side, I was just saying yesterday to your team, we miss you. We miss you seeing you face to face and going to your offices. So we are sure that in the upcoming months, hopefully, we'll be able to grab our bus and go ahead and visit you guys once again. We're all ambassadors. I mean, everybody that intervened today, my team, your team, we're all ambassadors of this new, I'll say, TMEC agreement. And I mean, I cannot avoid it as a Mexican Canadian. Obviously, I'm pro this agreement. So trade away, everybody. And if there's anything that blocks or that you have any questions, any hesitations, I think you have a great ecosystems around that can help you. So we're all here to help. And thank you very much for your time. And have a great week.
Thank you all.